Strange times have set in on Wall Street. Stock market crashes generally happen when prices reach elevated and unrealistic levels, which can be the case. How can the S&P 500 be so strong when the US economy shrank by an annualized 32.9% in second quarter, and when US unemployment was 10.2% in July versus 3.5% in February? The S&P 500 closed at the level of 3,351.28 on Friday. It added 2.5% week on week. As a matter of fact, every day of the week the trend was upward. This year, the S&P 500 has been driven by 5 mega-cap tech stocks: Facebook, Amazon, Google, Apple, and Microsoft, or FEGAM for short. US equities were mixed at the close on Friday, as gains in the utilities, telecoms, and financials sectors propelled shares higher, while losses in the technology, consumer services, and consumer goods sectors led shares lower. Dow Jones finished the Friday session at 27,433.48, which is 3.8% higher than the previous week's close. At the close in NICE, the Dow Jones Industrial Average gained 0.17% to hit a new one-month high. Dow is gathering steam as investors are focused on Trump's controversial aid extending executive orders. Meantime, the tech-heavy NASDAQ Composite Index closed the Friday session at 11,010.98, with a slight decline of about 1% on Friday after a week of upward trend. It increased by 2.5% week on week. Biggest losers here included Apple Incorporated, which lost 2.27% or 10.34 points to trade at 444.45 in late trade. However, on the weekly basis, the shares grew by 4.5%. The considerable uprise in Apple's valuation, however, makes us think about the possibility that the tech giant is running too high. Apple's market value stood at $999.5 billion 5 months ago in March, and now it's almost doubled. The shares trade near $445, driven by investors who see pent-up demand for upcoming device upgrades and strong sales despite pandemic lockdowns. A plan to split the stock 4-to-1 could propel Apple's market value above the $2 trillion mark. A bet on Apple is a bet on the rollout of the next generation network, 5G. As the supply chain troubles also loosened up, this allows Apple to move ahead with the 5G handset rollout. Airline shares surged higher on Monday as federal data showed air travel at the highest volume in nearly 5 months. Better than expected number from the Transportation Security Administration helped buy airline shares. The number of people passing through checkpoint at US airports rose for a second consecutive week. American Airlines Group shares closed the week at 70.50 week on week. The gain of 21% is registered. On Monday, the shares added 8% and cost 76.10. Additionally, $25 billion aid requested by airlines to allow them to preserve jobs through March 2021 recently gained support from both political parties in the United States. Let's move on to post services, which are again as well. FedEx shares propelled almost 7% to the highest in 2 years. Analysts expect strong results and pushed it from a market perform to an outperform. The shares were trading at 183.53 at the Friday session close. The weekly growth was as high as 9%. Shares of FedEx rose last week after a statement that they will be raising prices in order to manage the overwhelming demand as a result of stay-at-home mode required to curb COVID-19. Thus, FedEx will boost international fees, and it also plans to apply holiday surge. The Monday price growth provided a more than 120-point boost to the Dow Jones Transportation Average. You are watching weekly review of US stock market on InstaForex TV channel with me, Kate Tichina. We wish you profitable deals.